Welcome back everyone, and in this video, we're going to take a look at a dividend aristocrat who's been on a downward trend as of late and may be trading at a very attractive level. And this is a company whose products are in high demand and that demand is expected to stay for many years in the future. And the stock that we're going to go over today is Clorox, who just reported that they are now producing 1.5 million canisters of wipes every single day to meet the demand caused by the pandemic. And all across the world, households and companies have increased their cleanliness standards. And these standards are permanent. We're never going to go back to pre-pandemic ways. All of the health effects we've set in place are expected to stay over the long term, leading to consistent and growing demand for Clorox products. And if we take a look at the share price chart, the company currently sits at $187 per share. And over the past year, they are up 15%. And the company's current market cap is at just over $23 billion, and the current dividend yield is at 2.34%. And if we take a closer look at the price movement over the past 12 months, we can see that before the fear of the pandemic took over the market, the company traded for $167. And then when all the investors were piling into this company because of the growing demand in cleaning products, we saw them shoot up more than 40% in only a few months. And then from that high point back in August of 2020, we've seen consistent downward momentum in Clorox stock back down to the $187 level that we sit at today, representing close to a 21% decline from the 52-week high. And at this current price point, Clorox is now considered undervalued, and they're actually estimated to be close to 7% below the estimated fair value per share of $200. So right now, this may be a very attractive level to jump in and start a position in this dividend aristocrat that has a 43-year dividend streak of growing that payment to investors each and every year. And that 43 years of consistency shows that through good times, through recessions and depressions, they can continue to not only pay out their dividend, but raise it even throughout tough times in the market. And going forward, that dividend streak is expected to continue for many years down the road. So if you take a look at Clorox right now, it may be at a very attractive level to buy this company who has consistent and growing demand for their products going forward. And before we take a look at Clorox as a whole, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe to the channel for daily videos, and we're going to start off by taking a look at Clorox's diversified product mix. The company operates in 4 main business segments. 41% of the revenue comes from health and wellness, 27% from household, 17% from lifestyle, and 15% from international. And if we take a look, their largest segment of their business, or 30% of the revenue, comes from cleaning products. And although it doesn't feel right to say anything good has come from a global pandemic, that's not the case regarding Clorox. A third of their business is coming from cleaning products, which are the number one most sought out product on the market right now. So I think this is going to lead to some long-term consistent growth in the demand for the leader in the cleaning space, which is that household name in Clorox. And the company over the last year has generated over $6.7 billion in net sales and has products being sold in over 26 different countries. And overall, if we take a look, some of their other key business segments include bags and wraps, grilling, cat litter, some food products, and of course, they have 15% of their business coming from international markets. And within each of these business segments, Clorox owns some of the leading brands. And if we take a look, over 80% of their portfolio comes from number 1 or number 2 shared brands. And we can recognize all these names because they're sold in every single supermarket and convenience store all across the country. Names like, of course, Clorox, Brita, Pine Sol, and many more you can find in almost every store all across the nation. And this diversified mix of leading brands has led to Clorox continuing to grow each and every year over the long term and returning a ton of value to Clorox investors. And if we take a look, their historical performance has been absolutely spectacular, and they rank in the top third of their peer set over the past 20 years. And if we take a look, the company's average growth rate over the past 5 years is at 19%, over the past decade at 17%, and over the past 20 years, they return an average of 11% per year to their investors, which is absolutely incredible. and TSR stands for total shareholder return, which is represented in each of these boxes. And for every timeline, they are outpacing their peer averages. And if we take a look over the long term, this company has grossly outperformed the S&P 500 over the past 20 years, with a total return of 868 compared to the S&P 500, which comes in at 322 since December of 2000. And going forward, we're expecting some massive growth from Clorox over the 2021 fiscal year. And the company actually raised their guidance after their latest earnings report and are predicting between 10 and 13% annual sales growth. And before the increase in guidance, the company was only forecasting between 5 and 9% total growth. And that now sits up between 10 and 13, which is a very strong sign for Clorox investors. And if we take a look, earnings per share are expected to grow between 9 and 12% over the 2021 fiscal year as well. And overall, this company continues to generate some very strong free cash flow numbers, which is a great sign for long-term dividend investors. And if we take a look, their strong free cash flow continues to grow as time goes on, from 10% back in 2016 all the way up to over 19% in the 2020 fiscal year. And that represents a 64% growth over the yearly average. And a company's ability to consistently grow their cash flow is very important, especially for a dividend-paying company, because that dividend is paid out in cash. So the ability to continue to grow their free cash flow each and every year allows the dividend to continually grow as time goes on as well. And going forward, this is a company that has a very strong track record of that dividend growth. We can see over the past 3 years, their dividend CAGR is at 10%. And in a longer term perspective, over the past 20 years, their average dividend growth rate is at 9%, which is absolutely incredible. And we can see on this chart the consistent long-term growth in that annual dividend payment. If we take a look, in the year 2000, the annual dividend was 83 cents per share. But now sitting 20 years later, at the year end December 2020, that annual payment is now above $4.39, representing a 5x growth over the last 2 decades in Clorox annual dividend payment, which is absolutely incredible. And if we take a look, their current yield sits at 2.3%, and that dividend only makes up 53% of their annual net income, which is extremely sustainable, giving the company a lot of money left over to continually grow the business, plus gives them more room to grow that payment over the long term as well. And if we take a look, their dividend increase in 2020 leads to a 43 years of consecutive dividend growth, which once again is absolutely massive, and very soon they will become a dividend king once they hit 50 consecutive years, which I am very confident that they will do. And if we take a look, even after such a long term, their dividend is still considered safe, coming in at a 75. So that just shows that over the shorter term, we're not worried about a dividend cut coming from Clorox anytime soon. And this company is also not very volatile. Although we have seen a lot of momentum swings over the short term, this company has a very low beta of only 0.26. So overall, if you're looking for a more slow growth and consistent company for your portfolio, this may be a name to take a look at, because usually their share price is not very volatile compared to the overall market. And now if we take a look at the company's income statement, year over year, total revenue continues to grow. Although it's not at a very fast rate, as time goes on, their total top line revenue is getting larger and larger every single year. And of course, over the trailing 12 months, we can see a mass expansion, going from 6.7 billion all the way up to 7.5 billion over the past year. And each and every year, although it may be on the slower side, total revenue continues to expand, which is a great sign. And if we take a look at their bottom line and their net income, we can see that their trend follows the total revenue numbers as well. Each and every year, that income continues to grow as time goes on, a very strong sign from this Dividend Aristocrat. And as of late, over this most recent dip, the company's actually been upgraded to a buy and seen a lot of different investment firms set price targets well above the current level, around $220 plus on Clorox stock. And we can see we have one price target of $233, representing more than 20% upside from the current level. And other firms have raised price targets to $268, and Wells Fargo has their price target set at $240 per share, with a buy rating on the stock. So overall, a ton of major companies still see some upside in Clorox going forward. And now if we take a look at some more price targets, we can see all analysts are really expecting some upside from this current level. And if we take a look at CNN Business, their average price target from 15 analysts is at $212, representing 13% upside from the current share price. And we're also going to take a look at two more groups of analysts to see a wider range of what Wall Street is predicting for Clorox stock going forward. And if we take a look, this group has a moderate buy rating on the company with a price target of $229, representing 22% growth from this current level. And if we jump over to the Wall Street Journal, their average price target is around $216, again, a ton of upside from where we are today. And finally, if we jump over to Yahoo Finance, the current price of $187 sits well below their expectation for $213 over the next 12 months. So overall, analysts all across Wall Street are seeing some upside in Clorox stock going forward, and now may be a very attractive level to buy in to this consumer brand who I truthfully believe is going to have growing demand for their products over the long term. I don't believe cleanliness standards are ever going to go back to normal, which is a good sign for Clorox and their future sales. So definitely keep your eye on this company. They're on a massive downtrend as of late, which may signal a very strong buying opportunity to jump in on the dip and purchase this long-term Dividend Aristocrat. So let me know in the comments what you think about Clorox. Earlier in the pandemic, I did think the company was very overvalued when they were trading above $237. But right now, in this $180 range, I think they're at a very attractive level, and I personally may add them to my financial freedom portfolio as well, because I think over the long term, like we've talked about throughout this entire video, the products and the demand are only going to be consistently there and growing in popularity. So thank you for watching. Let me know down in the comments what you believe and what you think about Clorox, and I will see you in tomorrow's video.